So let's have a conversation about Heikin Ashi charts. And before we do, though, how about you take 1 second to subscribe and check out the many trading videos that we do have on the channel here. I think you'll like them. And Heikin Ashi charts, they're probably not as popular as bar charts and traditional candlesticks, but for the traders who use them successfully, they don't really care how popular they are. Now, charts in general, they calculate the high, the low, the open, the close, which makes the main difference between Heikin Ashi and other charting types is it plots the average price. Heikin Ashi literally means average bar. And those who use Heikin Ashi charts, they're going to see the noise of the market virtually removed and probably a much cleaner representation of price movement. So what is a Heikin Ashi chart? Well, we can just define it as a charting method that shows the average value over time. And while you're never going to know the exact value of your instrument that you're looking at any one time, which could be a problem for day traders, there are other useful benefits of using these kind of charts that we're going to talk about. So how do we calculate them? Well, a good thing is that we don't have to, because most charting platforms are going to do it for you. And if they don't, your charting package is from the Stone Ages, so you should upgrade. And if you're using something like MT4 MetaTrader, you can download an indicator here. And if you use MetaTrader already, you should be pretty familiar with how to add a trading indicator to it. And like using an indicator, I like to know how the calculation is done to help recognize any nuances that I need to know to use them. And now, since I mentioned indicators, a lot of people put a lot of faith in them without understanding them. And when I started trading, I wish that I had someone to set me straight about indicators. So what I did is I put together something that I call an indicator blueprint, and it covers some of the popular indicators and a better way to trade with them. It's free, and the link is up here in the right-hand corner of the video, and I put it in the description as well. So as mentioned, the Heikin Ashi chart's not going to give you the exchange price at any time. And here's the calculation for the chart. You can see how the open is calculated, how the highs are calculated, the lows, and the close. So you can see by the calculation that there is a lag time between the real price and the price that is shown by the Heikin Ashi chart. It's similar with other indicators that rely on past price to plot. So you can see why the Heikin Ashi candles, they're not going to give you the exact price because it also uses the previous price as well. So that's why I say it's always vital to know the nuances of anything that you use for trading. So without understanding that there is an actual difference in price between the bar chart or a candlestick chart compared to your Heikin Ashi chart, well, that could have you entering trades that you would not if your chart was up to date. So remember, the Japanese candlestick chart or the bar chart is going to show you the exact price of the instrument. The Heikin Ashi chart, the HA chart, it's going to show you a calculated average that uses data from the previous candle plot. So how do we read these? Well, for a moment, I want you to forget everything you know about Japanese candlestick charts, because some things here are going to be a little counterintuitive. For an example, a long upper shadow on a green candlestick that is Japanese candlesticks, that's considered weakness, but that's not the case with Heikin Ashi. Since these charts are an excellent trend determination charting method, let's outline what we should look for when we're considering trend direction. So I want you to see if you can pick these out on the chart. A bullish trend, it's where the green bodied candles with upper shadows indicate an uptrend, and you'd be holding long positions. So short positions would not be taken. Bearish trends, you have the red bodies for the candles and lower shadows, and that indicates a bearish trend direction. And you'd be holding shorts or looking for shorts. Possible trend change. Well, if you're familiar with Doji candlesticks, we're looking for virtually the same thing here on these charts. And whenever you see the colors flipping from red to green and back again, you could be looking at a ranging market, and that's a sign for you to step aside from trading. Now, one important thing to note is that I would only consider a strong bull trending market once the green candles have zero lower shadow length. And the opposite would be true for a strong bearish market. So how do we use these with candlestick patterns? Well, chart patterns, or chart art as I like to call it, they include patterns like flags and triangles. But I'll be honest with you that I treat almost all chart patterns the same, and I don't get bogged down in the name of the pattern. And I actually linked up a video here on the right that talks about patterns, especially the bull flag. All right, But for those who do enjoy digging into things, Heiken Ashi charts, they may make your preferred chart patterns look easier to find. So on this chart of corn, we have easily defined ranges. We have complex pullbacks, triangles, and you would trade these the way you would on a Japanese candlestick chart. And I would use these to alert me to a consolidation environment and wait to see which price breaks from the pattern. I would then look to see strong bullish or bearish action. Remember, look for the upper or lower shadows, and I would trade in that direction. Another reminder, Heiken Ashi is not showing you the true price. It's showing you an average that needs a prior candle open close to form part of the calculation. Now, there are a few ways that you can use Heiken Ashi as a trading strategy, and that includes strategies that use indicators. So to keep things simple, let's take a look at a strategy that uses trend direction determined with price action, common chart patterns, and the Doji reversal candles on the chart. So here we have a chart of a 1 hour Euro CAD Forex chart. Now you can go lower with other instruments, but I prefer 1 hour charts for intraday Forex trading. It's because of the noise. Now setting up the context, we can see on the left side a strong push to the upside in a range forms, and there's a lot of inside candles. So remember, we're looking to the direction of the breakout from any pattern. And at this point, a downside break could mean the beginning of a downtrend. So the range formed and smaller candles are forming with rejections off of the resistance zone of the range. Doji candles with small bodies are being formed, and we get a break to the downside that forms a double bottom. Now, pullback trades actually have an edge in the market. And for this potential downtrend to confirm via price action, we're going to need to see a lower high put in. So as price pulls back, the Doji candles form, and we can actually draw a trend line. So the break of the trend line and the first red candle to form without an upper shadow, we take a short position. So the lower low is made, price pulls back. The Doji candle, it forms, we draw our trend line. Price breaks, and we short the first red candle that has no upper shadow. So another low, price pulls back to make a rough double top. The green candle gets smaller, the red Doji plots in the chart, the trend line break and short taken. Price forms a higher low, and while price pulls back from the higher lows, the green candles begin to print with upper or lower shadows, and it's unable to stay above the resistance, so the breakdown occurs. A price forms a range with many dojis. Price breaks out of the range, and a base is at the top of the resistance zone and plots a doji. Now, trades can be entered when price breaks the high of the previous two candles. Okay, I've not added in stops or trailing stops or price targets on this chart. You're going to need to use the actual price of the instrument at the time that you note these setups. So you can see that using just technical analysis helps make Heiken Ashi useful for a day trading strategy. What about multiple time frame trading? So for those that are not familiar with multiple time frame trading, this is what you should know. You have a higher time frame chart where you will consider trend direction and any market structure. You'll have a median time frame chart where you do your technical analysis and you hunt for your trade setups. A lower time frame chart that you use for entries for the setups that you find on the medium time frame. And Heiken Ashi charts are really good for having you on the right side of the higher time frame trend. So this is a day trading setup for crude oil using the 60-minute time frame for trend and 15-minute for the trades. I'm not going to use lower time frames for the entries. On the left chart, you can see a strong down move in play, and many people would want to short it. So we glance at the hourly chart, number 1, which is showing very long shadows, which is weakness. And it's not visible on this chart, but at number 2, all the red candles have upper shadows, which is weakness. And when we combine that with extra large shadows, longs are the probability on the lower time frame. So the left chart on the third arrow, it shows strong momentum to the downside with a green Japanese candlestick putting in a lower shadow. Look over to number 3, and our green candles have no lower shadows, and the upper shadows are not very large. So the 1 hour chart is telling you to consider longs even with the strong 15-minute chart pullback. So let's just touch on a few important facts about Heiken Ashis. How is it calculated? Well, it's a calculation. It takes into account values from the previous day and uses an averaging formula to plot today's candle. What's the difference between a Japanese candlestick and the Heiken Ashi? Well, the Japanese candlestick plots actual price values. Well, the Heiken Ashi will use averages and smoothing out price action. And how do we use it for intraday trading? Well, you can use them much the same as regular candlesticks to trade off of. and you can consider using Heiken Ashi as a trend determination charting method. And as a trend trader who swing trades, I find Heiken Ashi to be a pretty valuable part of my own trading approach. So thanks for watching, and please just take a second to subscribe. Talk to you soon.